what separates the greatest traders of all time from the rest of the pack?
I know. Is it that they have a special education?
Well, to some degree, but it's not one of the primary differences.
Well, then could it be because they have exceptional chart reading skills, perhaps?
Not necessarily.
Well, I've heard that they have a crystal ball under their bed, which allows them to see into...
No, I don't think it's that either, no. When Jack D Schwager set out to write his book Market Wizards, he wanted to answer this question. So, he conducted several interviews with 17 of the world's greatest traders and searched for common denominators. The most important ones are arguably desire, discipline, commitment, patience, independence, risk control, and acceptance of losses. In this mini-series, in 7 parts, I will present the 7 traders that I found to give the greatest insights on professional trading from the book. And I will start out with none less than the legendary Paul Tudor Jones. Paul Tudor Jones is the manager of the Tudor Investment Corporation hedge fund and has a net worth of $4.5 billion. His claim to fame came when he predicted the Black Monday, the worst performing day of the stock market in American history. Not only did he survive the 20% market crash, but he thrived from it, securing a return of 62% for that month only. The most interesting concept that Paul Tudor Jones presents during his interview with Jack D Schwager is, in my opinion, his next to absurd focus on risk control. He admits that he always thinks more about losing money than about winning them. He uses stop losses both with respect to the price of a security, but also with respect to time. So, for example, if he is long in S&P futures that are down by, say, 10%, he could be stepped out. And if they don't make the move that he's expecting, he might give it a week or so, but then he's out too. What's even more interesting is that he has a stop on all of his trading activities if he reaches negative double digits in a single month. He's a firm believer that one should reduce position sizing when you're cold in the market. Having this risk control is what's allowed him to time many of the turning points in the market. Media prefers to present the story that Paul Jones buys 30 years US T-bonds 2 ticks from their lows, rather than the more realistic representation that on his 5th try, Paul Jones manages to buy the 30-year US T-bonds 2 ticks from their lows. Even though the second headline doesn't make as good of a clickbait, it can be an incredibly profitable trading strategy when you let your winners run and cut your losses very short. A few other interesting facts about him. In 1987, a documentary called Trader was produced about him as a result of his successful trading during the Black Monday earlier that year, although today few copies still exist in circulation. Apparently Paul Tudor Jones himself are buying up all of them. Perhaps he thought he gave away too many ingredients to the secret sauce in it. And he was also a champion welterweight boxer back in college. In the next video I will present Richard Dennis, who once was known as the Prince of the Pit, referring to the trading pits of Wall Street. We will look at how he too delivered knockout returns, like Paul Tudor Jones did. Also, there's one more thing I'd like to add to this video.
2 subscribers! Woohoo!
That was in Swedish, but I'll say it in English too.
1,000 subscribers! Woo!
To those of you who have followed me for a while, and to those of you who are watching this for the first time, and perhaps considering subscribing, thank you so much.